Yeah, you think the Fed has it bad, but believe it or not, things are actually looking more difficult for most of the other world's central banks. If you take away from China for a moment, this week you saw interest rate rises, not just from the Bank of England, but from the central banks in Australia, Brazil, Iceland, Poland, Chile, a bunch of other countries. And there were increases of 100 basis points, a full percentage point from Iceland and Brazil. We didn't see any rate increase in Turkey, but that's only because the central bank is under pressure from President Erdogan to stick with his rather idiosyncratic approach to cutting inflation, which is to keep the price of money really low. It's not working out so well at the moment. Inflation in Turkey is more than 60%. That's the highest in the G20. The bigger risk for a lot of these central banks, certainly bigger than it currently looks in the US, is that inflation by itself will tip the economy into recession because you have these soaring food and energy prices which are so noticeable and affect people's real incomes so immediately. You could see these economies shrink. And in fact, we saw the European Central Bank officials there warning that the Eurozone economy was in effect already stagnating from the effect of rising energy prices and other things, even when the central bank hasn't even raised interest rates at all. I think the country with the worst of all worlds is Britain. It's facing, if you like, America's very hot labour market, rising wages, but it's also got a kind of Europe-style energy squeeze. It doesn't have those other sources of energy that the US has. So that, as the worst of all worlds, made a bit harder by the reduction in trade flows with the European Union that we've seen since the UK fully left the European single market just over a year ago. And that was all confirmed by the rather gloomy forecast from the Bank of England this week as it went for its fourth consecutive rate increase, but also produced forecasts showing inflation was going to hit 10% towards the end of this year, potentially, and that the economy might shrink next year. Although we tend to focus on the mistakes that the Federal Reserve has made and the bad hand that it's given itself to play, it's central banks in other parts of the world that will probably face the worst effects. And I'm thinking there particularly of developing countries who ran up a lot of debt as a result of COVID and are now going to see the cost of that debt potentially rise, even as their economy shrinks in the face of this real income squeeze from rising food and energy prices. The other takeaway is for the credibility of central banks. If you think over the last 20 years, support for the WTO has waxed and waned. We've worried about support for NATO. Now we look at the G20 and wonder whether that's broken as an institution. But through all that, central bankers have been the ones we trusted to get the job done. Now, the most important central bank in the world, the Federal Reserve, has failed in its one job, quite spectacularly so. And if we look around the world, it looks like with the help of COVID, with the help of spendthrift governments and certainly President Putin, but central banks collectively could end up not just cleaning up that mess, but actually making it a lot worse.